A big financial change is coming. The Federal Reserve meets on September 17, 2025, a decision day that is predicted to send shockwaves through the global economy. And that's just the start. The Bank of England follows on September 18th. Then comes European Central Bank meetings, U.S. payroll data on October 3rd, and critical inflation numbers on October 15th, followed by another Fed showdown from October 28-29. Each date is a trigger, a turning point that will dictate global rates and market expectations. This isn't just news, it's the playbook for how you'll navigate the rate cut scenarios and find the path to win. Part 1. Answering a viewer question on stocks versus ETFs. Is it smarter to bet on individual tech stocks like Nvidia or Google, or build a foundation with broad ETFs like VOO or QQQ? The answer hinges on September 17th. If the Fed announces a rate cut, those high-momentum stocks could skyrocket, delivering the fast, explosive gains. It's the ultimate gamble, but if there's no cut, the dream becomes a nightmare. Volatility will tear through the markets, and those same high flyers could plunge hard. Mark, our video hero for today, knows he can't afford that kind of all-or-nothing risk. This isn't just money, it's his future. His game plan is powerful because it's simple. 80 to 90% of his capital goes into a core of broad ETFs. That's his fortress. The remaining 10 to 20% is his strategic play, the money he can use for calculated shots on individual names. His approach isn't just about managing risk, it's about managing anxiety. He's decided to lock in profits from any winning stocks now, rebalancing that cash back into his ETF foundation after the main dates and decisions are announced by the Fed. Part 2. Recent economic data and market sentiment. Mark needs to understand the probability of rate cut before the war for his money begins on September 17th. The signals are confusing, but a picture is starting to form. Clue number 1. Inflation. The enemy that has been eating away at his savings is finally showing signs of cooling. Core inflation has been stable, and the producer price index is not spiking. Clue number 2. He looks at the job market. Jobless claims are ticking up, and everyone is bracing for weaker U.S. retail sales. The American consumer is getting tired. This is not just happening in America. The International Monetary Fund is flashing a warning sign. The U.S. economy is under stress. He sees the same story playing out across the globe, with serious growth concerns coming out of Europe and the United Kingdom. The European Central Bank just held rates steady at 2.15% in September, signaling deep uncertainty. And then there is the wild card. Tariffs. They remain a constant risk, threatening to choke supply chains and send inflation soaring again. Yet, despite the noise, the market has placed its bet. It is pricing in the start of Fed rate cuts. Everything is riding on it. Part 3. Possible market reactions to Fed rate cut. With the stage set, Mark transitions from detective to strategist, mapping out what happens the moment the news breaks. If the Fed cuts rates, it's like injecting rocket fuel into the market's most powerful engines. He's watching the titans, Apple, Nvidia, and Google, coiling like springs, ready to launch. At the same time, high-dividend sectors that offer steady income, like utilities, real estate, and telecoms, suddenly become magnets for cash, promising safety and yield in a new world of lower interest. But every action has a reaction. A rate cut squeezes the banks, pressuring their lending margins and potentially turning a winning sector into a loser overnight. The very foundation of the financial world will shift. He expects 2-year Treasury yields to drop, which supports stocks, but also whispers a warning of a possible recession. The US dollar is set to weaken, a move that would boost exporters and ignite commodity prices. And then there's gold, recently trading around $3,578 an ounce, is forecasted by ANZ to surge past $3,800. Why? Because lower rates make holding gold, which pays no interest, a much smarter move. Mark isn't just watching these signals, he's preparing to act on them instantly. Part 4. Mid-cycle versus recessionary rate cuts. Mark knows a rate cut is coming, but now he uncovers a terrifying truth. Not all cuts are a green light to buy. History shows they come in 2 completely different flavors: One, a blessing, the other, a curse. He looks back at the 1990s, and more recently in 2019, those were mid-cycle adjustments, a little gas added to an already strong, expanding economy. The result? Sustained, powerful stock market rallies that made investors rich. That is the dream. But then he studies 2001 and the crisis of 2007 and 2008. Those were recessionary cuts. They were not a tune-up. They were a desperate pull of the emergency brake on an economy already crashing. Those cuts created a temporary illusion of hope, a sucker's rally, right before the market plunged into darkness. So, what is September 17th? The entire market has already priced in a 0.25% mid-cycle cut. It is the only thing holding prices up. A surprise no cut would not just be bad news, it would be a catastrophic shock, triggering a sell-off so sharp it would break investors. Mark sees it clearly now. Balance is not just a strategy. It is his only shield against the unknown. Part 5. Current Investment Strategy. Mark refuses to be a victim of the market's whims. He's not waiting for the Fed's verdict to build his financial ark. The engine of his plan is unshakable. Relentless dollar cost averaging into his core 3-fund portfolio, he feeds it consistently, buying VTI for a piece of the entire U.S. market, SCHD, for a growing stream of dividend cash flow, and AGG for the bedrock stability of bonds. This is his automated wealth machine, running 24/7. But Mark is not just passive, he is a predator. When the market panics and creates dips, he does not run, he hunts. That is when he will pounce, buying shares of timeless, cash-rich companies like Berkshire Hathaway at a deep discount. He is turning fear into his greatest advantage. Finally, he is forging his shield. He is increasing his exposure to inflation hedges, preparing for a world where cash loses its power. He's stacking gold, with forecasts calling for a massive price rise, and strategically buying Bitcoin, with estimates soaring as high as $122,000. This isn't a portfolio built on hope. It is a fortress engineered to thrive on uncertainty. Part 6. Adding Recession. Resilient ETFs. Mark's fortress is built, but he knows even the strongest walls can be breached by a direct economic hit. He needs more than a shield. He needs a portfolio that is truly bulletproof. So he is fortifying his foundation by adding recession-resilient ETFs. His focus is on the defensive sectors, consumer staples, healthcare, and utilities. He is adding the Vanguard Utilities ETF, or VPU, because people always pay their electricity bills. He is doubling down on the Schwab US Dividend Equity ETF, or SCHD, for its relentless focus on financially sound companies that are built to last. And he is maintaining his iShares MSCI World ETF, URTH, for the global diversification that acts as a buffer against any single country's crisis. That is how he intends to win. What are your biggest questions? Ask them below in the comments. If you've made it this far, I've got something special for you. A free, Fed rate cut investing playbook designed to help you navigate this week's big decision. Inside, you'll find a step-by-step checklist of strategies to consider before and after a rate cut, the key sectors most likely to benefit, and a simple tracker to help you stay disciplined with your investments. All you need to do is comment "Fed" on this video. Once we hit 50 comments, I'll drop the download link for everyone to grab their copy. Don't miss this chance to get ahead of the market before the Fed makes its move. So now you know how to position yourself before the Fed makes its move this week. But the big question is, where should you actually put your money for long-term growth? In my next video, I'm breaking down the 6 best Fidelity Index funds to buy and hold forever. The kind of funds that can grow your wealth steadily and let you sleep at night. Tap on the video right here, and let's build your portfolio for the future.